any asset which is the opening balance which is coming under the debit side to balance brought down. You must remember any liability item, so the balance brought down which is coming under the credit side, any asset item, the balance brought down which is coming under the debit side. The credit item is we are getting 3,44,000. 3,44,000, I am just opposite copy. So from this you need to subtract these two items. The difference is 1,38,000, which is nothing but the additional purchase. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 3, Session 4, 4th semester BBA Management Accounting. The chapter's name is, third chapter's name is Cash Flow Statement. Okay, so, and in the last session, which is related to the format and a few problems for and even the methods, direct method and indirect method. Even I have discussed the number of activities going in the which is coming up here in the cash flow statement. And today's session, it is a continuation section for the last session. So cash flow statement problem. Okay, the cash flow statement. So the just 1 year we did for the last session. And we are trying to do for 2 years cash flow statement. So you know, under indirect method, so the complete track we are getting here. So the following are the balance sheet of Evergreen Leaf Limited. So here the balance sheet liability side and asset side. There are 2 years is given. Opening date 31st March 2005 is we consider as an opening date, and closing date 31st March 2006. Even the asset sides also we can find out the opening date and closing date. Okay, so with the help of all the information, we need to identify which is coming under the operating activity and investment activity and financial activity. So no doubt there are number of items. If you know there is a specific format. If the current assets are increased, add or less, okay, we need to refer the format properly. So apart from the balance sheet, there is an additional information is given. Okay, so the first one, depreciation at 25% was charged on the opening value of plant and machinery. So which is applicable for opening date. Okay, now 2 lakhs is given for plant and machinery. And the second adjustment is an building under the construction was not subject to any depreciation, because which is a construction. So there is no depreciation as calculated for the building. But then also we can get to know the difference. Third one, rupees 20,000 was paid for income tax during the year. Okay, wherever the adjustment item which is always coming under something adjustment. Okay, so we need to adjust between the balance sheet item, respected balance sheet item. The fourth one, an old machinery costing 20,000. Old machinery costing is 20,000. So the written down value is given 8,000. Okay, so if you try to subtract 12,000, so the difference, the value is 20,000. We sold for 14,000. There is a 6,000. The difference we are getting, which is a loss faced by the company. Okay, so prepare cash flow statement as per Indian Accounting Standard 7 indirect method. Under indirect method, the detail description, the detail item, the detailed transaction we can show in the format. So here immediately before starting a problem, we need to write a title for the what exactly which company are preparing a cash flow statement. So the cash flow statement of Evergreen Leaf Limited for the year ended 31st 2006, which is a closing date under indirect method according to Indian Accounting Standard 7. So the first item which is starting from the operation, which is we call it as an operating activity. So here the cash flow from operating activity, so all the related adjustment we need to show in the format. So the first one, the profit before tax is given. There are 2 years profit is given. So we need to refer the profit and loss account. The closing balance is 40. Opening balance is 24,000. If you try to subtract, what is the difference? So we need to write here, so 16,000. Okay, so directly I am writing for the inner column. So after getting this, now immediately we need to add for non-cash, okay, non-operating expense which is not at all related to your complete business. So here, and appreciation of profit. So any asset, there is a life. After life is completed, you need to go for replacement. That's what we need to calculate for the depreciation. So there is 25% which is given based on the opening date, right? So the depreciation on plant and machinery opening date, the adjustment related to opening date. So 2 lakhs into 25%. 2 lakh opening date, 2 lakhs is given. Now 25% if you calculate, so 50,000 we are getting, which is a appreciation of profit or non-cash related item. So which is not at all expense. Okay, so which is going for the contribution. Next one, the proposed dividend. Whenever you are raising a fund, because the rising fund in the problem, in the liabilities, they clearly specify share capital. Okay. Now, share capital means actually you are expecting a share money from the shareholder, so which is coming under the financial activity, but the proposed dividend what you are paying, so we need to adjust to find out the net profit before tax. Okay, so that's what the proposed dividend, which is clearly given in the question. So here the proposed dividend 80,000 is given, directly closing date only, because we are preparing for the closing data. So that's what we need to consider for closing, if there is. Now the provision for taxation, there is a one specific adjustment, it's there. That's what I have specified, work note 4. Okay, so 32,000 how we are getting. So here any liability item opening date which is coming under the ledger balance credit side. So here ledger balance credit side, any liability, one more time repeating, any liability opening balance which is coming under the liability side by balance brought down. By balance brought down. Any asset which is the opening balance which is coming under the debit side to balance brought down. You must remember. So here the income tax opening date is given 28,000. Opening date is given 28,000. I need to write here 28,000. Okay. So 28,000. Now there is one specific adjustment is given for a income tax. So at the time of creating for the current year, so which is going for 2 cash, right? So 20,000. Okay. So when you are writing a balance brought down credit side, obviously carry down, you need to write in the balance carry down which is coming under the debit side. How much is given here? The balance carry down value. So here 40,000 is given. Now which side you are getting more? Here getting 60,000. From the 60,000, if you try to subtract to 28,000, you are getting 32,000. Okay, so I hope you clear. Now transfer to reserve. The transfer to reserve, there is one particular column. See, the closing date is 80,000, opening date 60,000. So opening date to, if it is increased, means actually there is a chances of transfer. Okay, the extra 20,000 you transferred. So that means the opening date is very less compared to closing date is more. Okay, so now there is a chances for transferring a fund for the reserve account. Okay, so that's what here. So the transfer to reserve 80,000 minus 60,000. If you subtract, the transfer is done here 20,000. So now after taking this total, we are getting for 1,98,000. Now here we did for add. Now immediately we need to do for less. Non-cash or non-operating income. Expense means add, income means less. You must remember. Again, the profit on sale of plant and machinery, there is one adjustment is given in the question. So the old machinery cost to 20,000 but sold for 14,000. So it is a loss faced by the company. So that's what, which is not at all related to your operation completely. So that's what we need to write. There is a loss for 6,000. So now we are trying to adjust for here. So 1,98,000 minus 6,000, 1,92,000, which is nothing but operating profit before working capital change. Okay, working capital, how we can find out the working capital? The simple formula for working capital, current assets minus current liability. This is okay. There is no changes in the working capital. Moving forward, now we got for 1,92,000 for the last line. Now we need to add increase in current assets. Always remember the current assets, if it is increase, opening balance to closing balance, if it is current assets are increase, okay, or decrease in the current liability. Decrease in the current liability means what? So the opening up, for example, you have a liability responsibility, it is a decrease means we need to less. If it is increase, the opening, for example, we need to pay for 20,000 to somebody else, okay, so your creditor, okay, so which is increased. Now 20,000 to 30,000 increase means there is 10,000 our responsibility or increase, right? So that's what we need to show here. So accept cash and cash equivalent. So we will list out the first one, decrease in current asset. We need to identify the current assets category. So here current asset, bills receivable, stock, okay, cash in hand, cash at bank. So which is clearly specified in the question here. Accept, okay, the first one, decrease in the current liability, decrease in the current assets, decrease in the current assets, which item? So here see the opening date 1,80,000, the closing date is 2 lakh. Now the current assets, bills receivable is a decrease, right? So in case of decrease, we will consider here, okay, so decrease in the receivable 2,80,000 minus 2 lakh, so we are getting 80,000, which is a positive, okay. Now so there is only one item, okay, so in this case if you try to compare for the stock, so the opening date is actually 80,000, okay, the closing is 1,60,000, but stock why we are not taking? So which is very clearly I have explained here. So accept cash and cash equivalent, okay, so that's what. So next one, less, increase in the current assets and decrease in the current liabiliity, accept cash and cash equivalent. Now stock which is coming under the 1,60,000, it is an increase, right? So that's what we need to write here, 1,60,000 minus 80,000, here the difference we are getting 80,000 here. And next one, decrease in creditors. So decrease in creditors, the creditors item, so which is actually opening date to 3,28,000, closing date to 2,80,000. Your responsibility or a decrease here, okay, your responsibility is a decrease. So that's what we need to consider here, decrease in the creditor. So 3,28,000 minus 2,80,000 if you subtract, so which is a positive you're getting here. First one is which is applicable for, okay, second stock related 80,000, and the difference here only 48,000, which is coming under the decrease in the creditors, okay, your responsibility are decrease. Now we need to take the difference here. So in the previous slide we got 1,92,000 positive sign. So we are plus 1,92,000 plus 80,000 minus 80,000 minus 48,000, the difference, the positive sign is more, okay. So once again 1,92,000 is a positive and 80,000 also positive, okay. So now there is only two item which is coming under the negative, then also we are getting a positive sign 1,44,000. We call it as a cash flow from the operating activity. We call it as a cash flow from the operating activity, 1,44,000. Once we get the cash flow from the operating activity, there is income tax adjustment is given. So in the adjustment item, always which is appeared for the 2 times, so we need to subtract income tax adjustment item 20,000. If you subtract, we are getting 1,24,000. We call it as a net cash flow from the operating activity. Moving for the investment activity, the cash flow from the investment activity, we know there is one adjustment for the sale of plant and machinery. So the sale of plant and machinery, which is an investment inflow, so we got 14,000 rupees cash because we sold, right? So next one, the purchase of plant and machinery. The purchase of plant and machinery, which is we need to compare for the difference for the asset side, okay. If the opening balance compared to closing balance, if it is closing balance increase, so there is a chances of purchasing the asset. So the plant and machinery here 1,38,000. And the purchase of building, okay, so here 80,000. I just know I told any liability item, so the balance brought down which is coming under the credit side, any asset item, the balance brought down which is coming under the debit side. Okay, so here the purchase of investment, so here there is only for 40,000 is given, so there is due date is not given here. See, look at this. The investment is closed, opening date is not given, so closing date only 40,000 is given. Okay, in case of building, so the opening 1,60,000, now closing is 2,40,000, so there is chances of purchase. Okay, so they already purchased. Now plant and machinery, opening date is 2 lakh, now closing date is 2,80,000, so there is a chance for purchase, they already purchased, that's why the closing balance are increasing. Okay, so I hope you clear. So here we are getting 80,000, how we got even the investment also purchased, that's why the closing balances are increasing. Okay, so if you try to adjust which sign is getting more, so the negative sign is getting more. So if you add together minus 14,000, okay, you have to add this one minus 14,000. So then also we are getting a negative balance 2,44,000. So we know in the previous slide we got net cash flow from operating activity 1,24,000, which is a carry forward for adjusting the next activity, investment activity. So next one, whatever we are getting 2,44,000 which is coming from the investment activity, so that's what I have written here, net cash flow used from the investment activity. Now moving to the financial activity, the same format under direct method, whatever we are following, the same methods, okay, the same items are coming here. Okay, so cash flow from the financial activity. Okay, so there is once in the liability side share capital which is given. Now we need to check for opening date more or less. Okay, so we are referring the balance sheet liability side. The opening date 3,20,000. Now closing balance is 4 lakh. So there is something like rise in the share capital. Okay, so there is something like rise in the share capital. So how much it is rise? So 80,000 which is coming input inflow means we are receiving extra 80,000. Okay, so again the debenture item also given. Now the debenture opening date is nil, closing date is 80,000. We have a rise for the debenture, so that's what I need to specify in the financial activity. So 80,000 which is coming for the business inflow. Okay, and the last one, the financial related dividend we paid. Okay, so we paid dividend, the proposed dividend we paid for 40,000. So the 40,000, how we got the 40,000 here? See, so the proposed dividend now opening date 40,000, the closing date is 80,000. There is a 40,000 increase. That means you paid for dividend 40,000. Okay, so once we listed inflow and outflow, we need to adjust. So now the sign is 1,60,000 minus 40, 1,20,000. Okay, and the investment activity 2,44,000, and the operating activity 1,24,000. Okay, so after getting this, so what we call it as 1,20,000, which is nothing but the cash flow from the financial activity. Okay, so immediately, so now we need to check under operating activity, we got 1,24,000 positive sign. Okay, we got 1,24,000 positive sign. 1,24,000 from the operating investment activity, we got 1,20,000. Okay, investment activity 2,44,000. Investment activity we got 2,44,000, and the last one financial activity 2,40,000 from the investment negative, and the financial activity we got 1,20,000. So if you try to adjust for all the three category, so if it is increase means we are getting a positive sign. Okay, so obviously we need to check here. So here 1,24,000, okay, minus 2,44,000. If you try to subtract 2,04,000 here, So we are getting here the financial institute. So from the A and B and C category, A is considered for activity, operating activity, B is a investment activity, C is a financial activity. So after adjusting whatever we are getting, so which is nil. Okay, now from the balance sheet, the cash balance is given. Okay, now we need to refer cash in hand, cash at bank. Opening balance 80,000, closing balance also 80,000. So here obviously we are getting here the increase or decrease. There is no increase and decrease. That's what which is coming under the nil. If you try to add for opening balance of cash flow, whatever it is available, so if you add 80,000, obviously the closing balance also getting tally. Okay, so cash in hand and cash at bank at the end of the 31st March 2006, 80,000. Okay, so moving, if you want, which is completely you can prepare with the help of ledger account also. In the coming slides, you will get more clarity. So here the income statement is given. Therefore, the difference between the closing and opening balance of P&L account, I have clearly specified working note 1, working note 2, working note 3. So the first working note which is related to calculate the profit and loss. Okay, so profit before tax we are depending. That's what there is a opening and closing. Okay, now the here the 40,000 opening and closing balance is 24,000, 16,000 I have specified in the cash flow statement. Now coming to the second working note, plant and machinery. The plant and machinery, which is an asset side, which is an asset item. So any balance brought down which is coming under the debit side. Okay, so that's what I have written. Two balance brought down, 2 lakhs is given. So there is one respected adjustment is given in the question. So here again there is one adjustment. We are finding a loss. So obviously we are finding a loss means what? Exactly the 14,000 value. Okay, the depreciation if you try to deduct, okay, which is shown in the additional information. The 14,000 minus, because the plant is continuously going for the production. So then also we are getting a 6,000 which is coming under the profit on the sale of machinery. Okay, and the next one, there is an additional purchase. We found the opening and closing balance. Okay, so the if it is increase means additional purchase. Okay, the balance whatever it is, we will try to get. Now there is a plant we have calculated for 25%, which is given the first adjustment, 50,000 we calculated. Again, we sold the plant, the old machinery we sold the plant, so 14,000. The balance brought when you're writing a debit side, the balance carried on, you need to show in the credit side 2,80,000. Which side comparing to which debit or credit? So the credit item is you are getting 3,44,000. 3,44,000, I am just opposite copy. So from this you need to subtract these two items. The difference is 1,38,000, which is nothing but the additional purchase. Okay, so moving for the next, there is one adjustment, the construction building. Okay, so the opening balance, again the asset balance, opening balance you have to show in the debit side. So the opening balance is given 1,60,000, okay, and the closing balance is given 2,40,000. Okay, now which side you are getting more? The credit side is more. Okay, 2,40,000, just opposite copy 2,40,000. 2,40,000 minus 1,60,000, the balancing figure, okay, which is nothing but your purchased. Okay, so now easily you can compare for the opening and closing. If the closing balance are increased compared to opening, so that there is a chances of purchasing. Okay, now the provision for taxation, there is one respected adjustment is given. Okay, in the question, the liability side also given. So liability side item, opening balance which is going for the credit side. So by balance brought down 28,000. Okay, and in this year, we got the difference here. When you are writing it by balance brought down, opening balance you are writing credit side, closing balance you need to write for debit side. So in the adjustment 20,000, okay, in the provision for tax, income tax is 20,000. So which side you are getting more compared to credit side? Here we are getting 60,000, which is given in the questions here. So if you try to subtract, we are getting a 32,000. Okay. So moving for next one, neither dividend proposed during the year nor dividend paid during the year is given. No problem. So closing balance of proposed dividend 31st March 2006, 80,000 is given closing balance. Should be treated as a dividend proposed during the year. That means it is in increasing. Okay. So the opening balance of the proposed dividend on 31st March 2005 or 1/4/2005 should be treated a dividend paid during the year. Actually, which is an increase or decreasing nature we are finding easily. Now investment is treated as a long-term investment. Okay, so because opening data which is given nil, okay, in the closing balance only which is clearly specified the investment value. Keep on watch for next section. Thank you.